It wasn't a job for everybody, but those who could do well, I finished one of my chapters with a true story. I asked a guy who was an old school trader down in the Merc, and I said, do you have change for 100? And he looked at me and he smiled and he said, that is change.
Welcome everyone. Today we're sitting down with Brad Schaeffer, looking forward to talk about his experience in the pit, his story as a trader, a bunch of user experience there to talk about. So Brad, welcome to the podcast. Good to be here today.
Oh, thank you for having me. Appreciate it.
Awesome. So tell me a bit more kind of how do you start trading in the first place?
Well, when I came out of school, I went to University of Illinois. In 1989, I came out, and I really wasn't sure what I wanted to do. I had a degree, I guess, if you want to call it that, in speech communication, but also back then, college was not nearly as expensive, so you could kind of, you could sort of sample the goods without having to come out and get a job immediately because you had a mounted debt. So I was fortunate in that I could sort of do some different jobs, and one of them was I was an artist for an ad agency, a boutique agency in Chicago, and what seems like a very strange place to start a career in commodities trading. But as it turned out, my brother, who was older than me by about 5 years, he was a trader on the floor of the Chicago Mercantile Exchange, which was one of the two big exchanges in Chicago. There's actually 3 exchanges in Chicago. And so he just basically asked me if I wanted to check out what he did because, he knew I was just sitting there drawing pictures for a living. And when I did, I walked onto the floor of the Chicago Mercantile Exchange, and I basically was blown away by the place. I was like, this is where I'd like to work. It was just unlike anything I'd ever seen. It was, and I just knew I had to be a part of it. So my art career lasted about 3 months. And then after that, I became a clerk. I got a job with my brother's firm as a clerk on the floor of the exchange. Those are the guys in the yellow coats and, on the stock exchange, I guess they would call them runners. And you kind of work your way up from there. And then eventually I became an actual trader on the floor of the Merc, both in Chicago and then in New York, and even in stocks for a while. And that was kind of how I got my foot in the door of the, of finance. And it was, one of the things that I talk about in the book, actually, is that that avenue for people like me who didn't have like an MIT, whatever, Sigma Cum Laude from the grad school or, physics majors or anything. Guys like me, just state schoolers, were actually able to get, like I said, our foot in the door in Wall Street. And I think, unfortunately, the trading floor was one of the best avenues for guys like me, and that is closed now. But it was a very good place to. I saw right away when my brother took me there that would be a good career move for me. I think it was.
What made you figure out that this would be a good career for you? Was it like the action you saw at that time, or was it something else that kind of brought you to it?
Yeah, I was never one to just sit at a desk all day, and I didn't want to do the traveling salesperson, where you have a territory and you leave your family for a week at a time and stuff like that. But what I liked about it was the speed with which deals were done. You learned right away that you learn how to make decisions very quickly. And that appealed to me. And what also appealed to me was there was like no real politics involved. I mean, I guess there was to a certain extent because, you did the business with certain brokers, but really, all that mattered was if you were a good trader or not was, did you make money? And if you made money, you're, without risking the farm, obviously, if you made money, you're a good trader. If you didn't make money, you weren't a good trader. And what it said on your, whatever degree was hanging on your wall didn't matter. So I kind of liked that aspect of it. And I liked the Wild West aspect of it. And I liked the fact that it was physical. I was a 21-year-old, 6'1", whatever, kid who just, with a lot of energy. So it was a perfect place to go and kind of have that good channel of sort of sowing your wild oats, if you want to call it that, but just on the financial side.
Do you have any specific kind of memorable trade that you think about still today, or any kind of trade that stands out from the other ones?
Yeah, it's the thing that's strange about trading, especially when you're trading commodities, And right now I'm trading natural gas, but I've traded, or I should really say more futures than just commodities per se, because, I've also traded Eurodollar options, and futures, which are obviously not physical commodities. But one of the things that I learned was how quickly money can be made and lost. And there's actually a chapter in the book called 40,000 Ticks. And just real quick, what a tick is for those listening, a tick is just it's the smallest increment of price change. So for instance, crude oil barrels move in pennies. So each penny, like if it goes from $50 and 1 penny to $50 and 2 pennies, that's a tick. Each tick is $10. Well, in Eurodollars, a tick was $25. And we actually had when we were on the trading floor, I mean, I laugh about it now because it's 30 years later or whatever, but we were on the trading floor and the clerk, my brother flashed an order towards the clerk to do a big order, a big trade, right? The clerk got the order and, everything's done with hand signals. And this was done from probably a good, 30 yards away or 20 yards away because this was a very big pit. And so the clerk did the order. And then when he looked up, he thought my brother was giving him another order to do the same trade. All he was doing was actually checking on the order. So, and then of course what happened was, so they put in an enormous order, double that they needed, and the market collapsed. And basically you could lose $1 million, and these are 1991 dollars. You could lose $1 million like that. And it was very scary. And when I watched that happen, I realized, I was like, holy cow, this is, it taught me to be very, very cautious and to always like you ever see like a squirrel when it's kind of running across the yard, it's always looking around, and that's kind of the way you have to be when you're trading, because it always seems like there's forces trying to get you, either from the outside boring in or from your own discipline. So, but yeah, I saw how money can move very quickly. But, I saw how some guys literally couldn't hack the pressure. It's a lot of pressure all day. And, some guys, it wasn't a job for everybody. But those who could do well, like I always, I finished one of my chapters with a true story. I asked a guy who was an old school trader down in the Merc, and I said, do you have change for 100? And he looked at me and he smiled and he said, that is change. So that's where I wanted to get to at some point in my life, So my priorities have changed since then. But back then when you're 21 and a guy, says that to you, you're like, yeah, I want to be that dude,
Tell me about the difference. So how did the good guys handle the pressure versus the ones who just cannot do this for a living?
I don't know, man. I mean, I hate to even bring in a metaphor of combat because obviously, being on a trading floor is not even in the same universe as like, it's like jumping onto Iwo Jima or something. So I don't even mean to diminish that. But I do understand, my father was a veteran. He was actually a combat veteran. He was a Marine in Korea. And he just said, you had no idea if you were going to hack it or not, and there's really no, I don't think there's any formula, where you say, oh, this guy's going to do really well. And this guy's not going to, he's not going to hack it or this, and I think it was the same, some guys who you thought would be killer, let's say in war or let's say whatever, they end up being the guys cowering in the foxholes, while the other guys who you think are kind of meek and quiet, they pick up the, flag and they keep going forward. So I just know that I think with me, why I was able to do it pretty well as a clerk, which is basically taking a ton of orders and then switching to trading, which makes you make very, very fast decisions, right? Is I'd had a couple of preparatory jobs. Steve Jobs actually said in one of his, one of his commencement addresses, I think it was for Stanford, and I don't know if he's the one who actually coined this phrase, but I've always liked it, where he said, you can only connect the dots backwards sometimes. And and for me, it was like every job I had, I'd lost my father when I was 16. So every job, so I kind of was taking some jobs to help make ends meet. So like I had a job shoveling compost at a apple orchard. I had a job teaching physical education at a place called Little City for the mentally handicapped in Palatine, which was a great community for people, with mental handicap. And, and I taught, and I was a waiter, and all these things I think kind of taught you how to act under pressure and how to come in and, especially in my first job basically shoveling, was very good at destroying my ego and any sense of having a sense of entitlement. So that was one of the things I loved about the floor. You walk down there and people didn't care who you were, what your name was. Just get over there, learn the business, and, I don't care who you are. This is our house now. And it was very, very humbling in that respect, but in a good way, I think.
I can imagine that, definitely. So how is it to move from like these big numbers, trading the pit, a lot of action, to then trading on your own by yourself at home? Is it the whole different structure, or how did that happen?
Yeah, well, it's very scary. Well, number one, because when I was trading on the pit, I was, I was trading OPM, right? Other people's money. And that puts a certain pressure on you because, you want to do well and you feel a fiduciary duty to the person sponsoring you. But at the same time, deep down in the back of your mind, if God forbid there's a horrible error or something like that, you personally are not going to be wiped out, right? So and on the trading floor, it was there was much less analytics that went into each trade because you pretty much had the values right in front of you, or you had them in your head, and you knew immediately if somebody was off their market or not. And it was really, a lot of it was a matter of push and shove to see who got the deal. Whereas over the counter, it's just, you can set up, which is what I do now. You can set up your parameters on your platforms, and it's a much more quiet, somewhat more boring existence. But also because it's my own money, I think it forced me to learn how to trade over the counter with a lot of discipline because, I can't afford to make a mistake. I got no safety net, so to speak. So I think that really helped because the most important thing in trading by far is discipline. Anything else doesn't matter. You can have the best ideas in the world, but if you don't have a plan and you don't have discipline, it's not going to matter. So all these things sort of taught me the discipline aspect of the business, which is vital.
So how would you describe your trading style these days? What are some things you focus on, and kind of how do you run your trading these days?
I just like to look at, you can kind of see how certain derivatives are valued, and you can see whether or not they're undervalued or overvalued, or at least in theory, if they are. Many times I've bought something I think is undervalued or sold it thinking it's overvalued, only to have it go, even more against me or something like that. But, you just try to, this sounds like this is trading 101 cliche, but the best, if you want to survive, cut your losses early and let your winners ride. And that is as, that's like saying buy low, sell high. That's how basic that is. But in commodities trading, you have a special risk out there because number one, you're trading with a lot of margin, and so a small loss can become a big loss very quickly. So anytime you get into a trade, you have to ask yourself, where am I going to get out of this trade? Right? You have to have a reason. Say, what's my uncle point? What's the point where I say, gosh, what, I'm wrong on this? Because you're going to be wrong a lot, right? And number two, you say to yourself, okay, how much can I afford to lose on this trade? And then you sort of adjust your size accordingly, right? So if you think if you can afford to lose, let's say 20 points, right? And so you say to yourself, okay, I'm going to buy 10 here, and if it goes down 2 points, I'm out. That's a 20-point risk, right? Or you say, I'm going to buy 2, I'm going to wait till it goes down 10 and then get out. That's also a 20-point risk, right? It's just, so you just have to be able to, know ahead of time when you're getting out of your trade and stick to it. The key is discipline. And it's also, one of the things I kind of like about the fact that my book came out in 2023 is because in 1923, one of my favorite books, and I think a lot of guys in my industry's favorite book on trading came out, and that was the book called Reminiscences of a Stock Operator, and that was by Edwin Lefevre. And it's a fictional account of the exploits of the great trader Jesse Livermore, a man who made I think the man made like $100 million in the crash of 29, But, and he talks about, to me, one of the most interesting aspects of it is the theme of the book is that to be a good trader, you have to juxtapose hope and fear. And what do I mean by that, right? Or what I should say, what does Lefevre mean by it? I'm just kind of regurgitating what he said, but I think it's worth it. is that most people when they buy, let's just use stocks. Most people when they buy stock, they see it going down, right? They hope it's going to come back, right? Or if they buy stock and they see it going up, they fear they're going to lose that profit, right? So what they tend to do is they tend to hang on to their losing trades, hoping it'll turn around. And they tend to get out of their winning trades way too early because they're afraid they're going to lose that profit, right? You have to turn it around. You have to say to yourself, you have to fear that your losing trade's going to lose more. And you have to hope that your winning trade's going to win more. And that seems, you'd be amazed how hard that is, at least for me. It was an impossible, like emotional yin and yang I had to completely twist around, and I think, and really, that's just, again, one way of saying cut your losses early, let your winners ride. So I can tell you this, one thing I do know about myself is that I'm very good at taking losses, and that's important.
Yeah, it's kind of like seeing it the opposite way most people see it, which is definitely a good thing. I'm curious if there's any other of these kind of common things in trading that you don't really agree with.
Well, I mean, there used to be a common, back in you remember, I've been in this business on one side of the phone or the other, either as on the sell side or the buy side for like 30 some years. And one of the things that fascinated me when I first started looking at trading and technical analysis, which there's technical analysis, which is basically you look at a chart and you say, if this happens or that happens, that goes, right? Then there's fundamental analysis and says, oh, it looks like the winter is going to be pretty hard this year for the orange crop, But what it used to be, there was a big sort of movement called trend following, and I was a big proponent of it myself. And basically, it was momentum trading. But what happens is, the whole idea was just to give you an idea how markets are kind of human constructs and they're always changing. There was the idea of trend following. It's even in the book Reminiscences of a Stock Operator a little bit. Let's say that the high of a market is $50, right? And it'll say, okay, if it goes above $50, that means something has changed fundamentally, and so you should jump onto that, right? And so people would start putting in these orders above it because they figure once it breaks this ceiling, something very big is going to happen, right? The problem is that everybody started looking at that number as the signal, and it started becoming a Heisenberg uncertainty thing where, the very fact that I'm looking at that number is the reason why it's getting there. It's like we're starting to impact the very market that we're supposed to be reactionary to. And you see that happen. And I think, the key in trading, some people like to say in commodities trading, is buy high, sell higher. That works in some markets, like, which are longer term trend markets, but you can't do that in something like natural gas that moves up and down 10% in 2 days, or corn or something like that. So you have to be nimble. So I tend to not believe that just because it's making a new high that it's going to keep going higher. So you got to be careful with that now because everybody's looking at the same thing.
Does that mean you try to focus more on reversals, or does that mean you still try to catch a trend but at a better price or better level?
He does an options trader, and options trading is more about identifying contracts that are undervalued or overvalued, buying or selling them, and then hopefully finding a similar contract, statistical arbitrage, a similar contract of value against that to kind of have this theoretical edge that comes into play. And so really, I try to do that. I'm not a huge speculator. I don't like say, natural gas is trading $2.20 today. I bet you it's going to be $3 by the end of the month. I'm just going to go along. That's not really trading. That's just speculating. A lot of guys do well doing that. But I try to stay in my comfort zone, which is I trade one product against another, and I trade various different pipelines. And that's kind of my little niche.
How do you find that kind of niche or comfort zone in trading? Is it based on experience and kind of trying different things out, or is it based on what you feel is best for you?
Yeah, a lot of guys in trading kind of are this. We're sort of like the flotsam and jetsam on the on the ocean of the financial community. We would just kind of go where we go, and like in my job, for example, I just I was trading Eurodollar options in Chicago. My boss needed somebody to go to New York. I had been my future wife was living in New York, and I wanted to try something different. So next thing I know, I'm trading energy in New York now. And then from energy, I got a job as an energy broker. And then, and that's kind of how I got steered into energy. Who knows if I'd gotten a job as a brokering, corn or brokering metals, I might have become a metal trader, And but that's the way a lot of careers are. What I don't know if John Lennon said it, but it was like, was it life is what happens when you're busy making plans, right? So, but it was a good path for me. I think energy is a great market to trade. And it's a great market to broker too.
What makes you like energy? Or I guess some people might not be used to it. They might not be used into that, like natural gas, which you trade these days. What makes you like that market more than other markets?
Number one, for natural gas, it's domestic. So you can kind of collate all the data, as much, you can collate a lot of data without worrying about a lot of unknowns out there. Like for instance, you can trade crude oil, but as you know, what happens if tomorrow, Iran detonates a mine in the middle of the Strait of Hormuz, right? So all that understanding of supply and demand goes out the window. So natural gas is a little bit more predictable. If it's going to be cold out, it's going to be cold for an extended period of time, and you've got enough, and you look at your storage, you can kind of put these numbers together and figure out what to trade. I actually liked trading Eurodollars. I liked trading, financial instruments, interest rate futures, because they tend to trend, So, if the Fed cuts rates, it's not just going to cut it once. It's going to cut again and again and again. So those lend themselves very good to that trend following still. But you have to have a very long-term view. And at that point, that's not what I do. I trade in and out. I try to keep my positions pretty small, but I'm not a day trader, but I'm not I have no positions in natural gas out for a year or anything like that. I wouldn't, there's guys who know more about what's going on in the market than I do right now. And that was kind of the thing when you were down on the trading floor. One of the big misconceptions people had was people thought that we knew everything. We were down on the floor. And that's why some financial correspondents like to report from the floor. We were the last people to know anything down there. Like a market would come, a huge move would happen, and we'd be like, what the heck just happened? And then we'd look up on the tape and say, Fed cuts interest rates, full point or something like that. And we were like the last to know, But people think that like we were the hot shots down there moving markets. We were just trying to make money without losing everything we had.
So when you say you're not day trading, but you don't keep it too long term, what's the time frame exactly? What kind of time frame do you focus on?
I just trade a month or two out. I like to trade front month spreads. I like to trade second month spreads. Like right now, the natural gas, the front month spread is the March April, which in trading, if you read my book, you'll see that's called the Widowmaker spread, because that could be so volatile, because that's the difference between the winter months and natural gas in the summer. So I like to look at stuff like that, but I have no long-term view of natural gas. So I don't trade out there. I know you can actually do quite well if you buy some, what they call leaps, with the version. But, if you want to just basically put your chips on red and just keep putting your chips on it, hoping it happens, but that's not what I do.
I'm sure you talk to a lot of traders who either want to kind of be independent traders, or they want to have probably a bigger finance job or something of the sort. What do you see these traders kind of do wrong most of the time? Are there common mistakes that people tend to just kind of fall into?
I mean, part of what I wrote was that some guys couldn't adapt to the change that was going on the floor. Right, the trading floor was on its way out. I mean, I think I believe the first trade, I have to look in my book, I believe the first electronic over-the-counter trade in the Globex was done in 1992, and by 2012, right, just, 20 years later, the trading floors are gone. These floors that were around since the 1840s, some of them. And so I think a lot of guys had a hard time adapting. And look, I was also fortunate. I had a skill in selling too. And so I was able to take my trading knowledge and convert it to a sales career too for a long time, and then eventually learning a new market again. So, but, the guys who I think did well were the guys who realized that the market's going to be interconnected. And so they started to build trading companies as opposed to just, hey, I'm trading, I'm going to bring a buddy of mine on to help me out. But some guys who really had some good, vision, like the man I worked for several years in Chicago, and New York. He had that kind of vision, and a couple of people did have vision, and they've done quite well. And others, I mean, it was a different skill set. Not everybody could, trading, floor trading and over the counter trading are not the same skill sets at all. And some guys I just think were only programmed for one type of trading, and once that trading, once that floor trading was gone, I think a lot of these guys really didn't know what to do. And a lot of them are no longer in the business because of it. I like the business too much.
What about the opposite? The guys who start trading these days only from like the internet, they know exactly like all the patterns because they have a lot of information that they can read or watch on YouTube. What's the mistakes they make, you think, that kind of prevents them from getting to that good level?
Yeah, it's funny. We have there's an expression, I think Ed Sekoda said it, many are called, but few are chosen. And, well, I could tell you, I mean, the classic amateur mistakes are what I just described. It's everybody, double up to even up. If I bought it at 20, I really like it at 15. If I really like it at 15, I love it at 10. I mean, you have to, first of all, I think what they do is, I think people don't know if they're day traders or if they're investors, right? I'm just talking stocks because I don't know how many people are out there doing, TD Ameritrade doing, slinging corn bushels, right? But, and I think what happens is, a lot of guys can't decide, am I an investor or am I a day trader? Or am I a trader? And it's not the same thing. Like an investor, like Warren Buffett's an investor. Warren Buffett says, I buy companies, and the way he does it is through buying their stock. But he buys the company, right? He looks at this and he doesn't care if the stock goes up and down every day or something like that. He's like, this is a great company. Whereas a trader, like I don't know, like a Cohen or something like that, he'll be buying, XYZ at $1.20, and he'll be selling at $1.40, or back and forth a couple million times. And I think a lot of these guys who hook up with with a TD Ameritrade or with the Vanguard or something like that, I think they're not sure what they want to do. And I think what happens is they feel like investors when they're losing money, and they feel like traders when they're making money, and it should be the other way around, right? They'll be like, okay, well, my account's down 50%, but it'll come back. Whereas they go, oh, my account's up 50%. I can't lose this. I have to get out of it, And the bottom line is, if you're in a losing trade, it's because it's a losing trade. If you bought it, how do you know it's a losing trade? Well, pretty simple. You bought it at 20 and it's trading 15 right now. That's not a winning trade, If you exited this position right now, would you make or lose money on this trade? And I just think people, I just can't emphasize enough how much you need discipline, at least certainly to trade commodities, If you're going to do the stock market, just buy and hold. I mean, I bet you do just as well as any stock picker out there.
Do you think anyone can be a trader if they kind of spend time to learn the skills and practice, or do you think it's only for a certain personality or a certain kind of skill trait?
That's actually a classic question that was, I don't know if you've ever heard of the turtle experiment or not. I forget the traders. You might know who they were. Was it Richard Dennis or somebody else? Who basically I think it was like the classic environment heredity debate, social sciences, where they decided that they could create traders if you give them certain rules and you force them to follow them, right? And if you do, over the long run, everybody that they had, pretty much did very well as long as they followed the rules, right? But the thing is that was also during the period that I was discussing before. That was during the time when trend following was still not something that everybody was focusing on, And so these signals were more legitimate than they are now. Now they're what we call a lot of noise. I don't know if anybody can become a trader. I don't think anybody can become a great trader. Like, I'm a decent trader. I make a living doing it, but I don't consider myself a great trader. I consider myself like a Soros or Jesse Livermore, or whatever, you name them. I can't think of it. Millennium or whomever. So I think you can be taught to be a good trader, but you have to have self-discipline and self-awareness. It took me a long time to do that, to be honest. So, talking calmly and sanguinely about it now because I'm in my 50s. But I can assure you, there's a couple hair-raising stories in my book when I was in my 20s that were that basically. Let's put it this way: I had one bad trade where I lost 10 pounds in about a week, and I was only 180 pounds at that time. So
interesting. You mentioned about the noise increasing in the market with these especially trend following setup. How do you filter the noise in the market?
It's kind of, I guess the metaphor I use is, and I should look this up, is an apiarist, I believe, and if your listeners, please don't get mad at me if I mispronounced it, but basically somebody who is a beehive expert, right, would look at a beehive, and I don't know about you, but I would just see nothing but bees going nuts, right? But they look and they see the patterns, and they see this guy's shaking this way, telling them to go here, and this guy's doing this, and this guy's doing that. And it's kind of the same thing, on the outside looking in, it looked very chaotic, but actually on the inside, the communication was pretty clear. We had a couple of mistakes, and that was bound to happen. But miscommunications are bound to happen in an auction format, which is what that was, right? That was open outcry. But surprisingly few errors occurred considering how crazy and nuts it was. I mean, I remember one time when a market went crazy and a bunch of guys were screaming and yelling, and I saw one broker, basically he couldn't get his order filled, right? He was standing there with a card trying to sell to somebody something, in this mosh pit. If you ever saw Trading Places, it's like it was like the Duke Brothers guys trying, basically trying to get his order done. And so I told him, I said, come here. So we literally ducked underneath a bunch of crowded bodies, like on our hands and knees, and did the trade under the table, like under this group of crazy bodies, and people were falling and stuff. I forget. It must have been one of those days when the unemployment number just came out really crazy. But no, it was, believe it or not, it was not hard to figure out who did what. And remember, too, there was a lot of boredom on the floor, too. It wasn't always crazy. It was, and so, we would have days where we'd just be standing around doing nothing. And believe me, 7 hours, 8 hours standing on your feet, not even being able to, to sit down for a second. Even in your 20s, that got to be kind of difficult after a while, though I shouldn't complain if there's any military guys listening to this.
Yeah, people should definitely check out your book. You want to tell them more about where to find it and what your book is all about?
Yeah, so the book's called Life in the Pits, My Time as a Trader on the Rough and Tumble Exchange Floors, and it's just about my experiences on the floors of the Chicago Mercantile Exchange, which, if you've ever seen the movie Ferris Bueller's Day Off, that's the trading pit that they're looking at. That was the actual pit that I was in. And my time is trading in New York as well. And by the way, anybody watching Trading Places, the quote-unquote frozen concentrated orange juice pit was actually the gold pit in the commodities exchange in New York. So, and so it just talks about my time trading, some of the lessons I've learned, the mistakes I've made, and hopefully it's just kind of an homage to what I think was a really interesting way to do business, which was the open outcry trading floors that sadly, for the most part, are no more. But it was a great place to do business while it lasted, that's for sure. So.
Yeah, definitely a good read for sure. Thanks, man, for your time. I appreciate your advice that you hear from us. Definitely good stories that we talked about. And people can check out your work. I'll put a link below in the description of the videos and the show notes of the podcast.
Yep. Just go look for me in Brad Schaeffer, author. If you go on, there's a podiatrist named Brad Schaeffer who's also from the state of New Jersey. And so and apparently he's kind of famous. So you got to make sure it's Brad Schaeffer, author, or else you're going to end up getting a podiatrist. So who would have thought? Some guy named Brad Schaeffer with my exact spelling in New Jersey, Oh, well. But thank you so much. I appreciate it.
Thanks for your time, and hopefully you can catch up soon and talk to you again. That'd be cool.